to summon a new spirit of dedication, sacrifice, and as we work towards one common goal. With the ever-changing world, achieving Vision 2030 aspirations requires innovation and responsive approach to the changing global and domestic dynamics. More than ever, and more so for the ever-evolving insurance industry. The insurance industry is undergoing rapid transformation, driven by a combination of technological advancement, changing customer expectations, and evolving risk landscapes. But as we navigate the environment, and as we seek to sustainably grow the industry, and also as we seek to change the perception, the negative perception about our industry, ostensibly occasioned by the losses suffered by the market on account of hyperinflation. It is hard to ignore innovation as a key driver to value creation. It's only creation of value that can salvage us as an industry. It's only creation of value that can help us change the perception, the generational myth that has condemned us into, or that has associated us with the losses of value in the past. You know, Justice Smith did an inquiry into the losses that were suffered on account of hyperinflation or prior to 2019, and established that the pensioners and policyholders need to be compensated for the war loss. But it's not only that compensation which is enough, but going forward is the need to ensure that we create value for our stakeholders. So we endear ourselves, we change our perception with the stakeholders. So this makes innovation a key driver to value creation. And we have seen recently the growing reliance, pivoting of the market on innovative solutions. We have seen growing growth of artificial intelligence, the Internet of Things, blockchain technology, and big data analytics, which the insurance industry should also capitalize on for value creation. All over the world, there is increased reliance on artificial intelligence and machine learning to improve underwriting, claims processing, fraud detection, and customer experience. Similarly, there is increasing reliance on Internet of Things to generate vast amounts of data and assess risks more accurately and develop tailor-made insurance products. Blockchain technology is also growing, increasingly growing in importance as businesses try to streamline their processes and improve transparency and reduce fraud. Importantly, reliance on big data to enable insurers gain invaluable insights from large data sets and leading to better decision making and risk management is becoming a game changer, all in the name of value creation. So the underlying is the need to create value. But as we try to create value, we are aware of the changing customer expectations. The customer expectations are evolving. But as these expectations are evolving, we must also measure up to the requirements, to the new requirements, the emerging requirements of the market. This is why digital transformation and the growth of personalized products, real-time interactions are gaining growing significance in the insurance industry. So we need to develop, to grow with the changes or the changing demands in the marketplace. As customers increasingly expect seamless digital experience, including online purchasing, claims filing, and customer services, digital transformation has grown up to become key. There is urgent need to respond to increasing demands for tailor-made insurance products and meet specific needs of and lifestyles of the market that we serve. But more importantly, real-time interactions are expected to deliver quick responses to customer services, and often through digital channels. It is important to underscore the effect of evolving risk landscape. The business is all about risk management, but as risk is evolving, characterized or typified by climate change, growing cybersecurity issues, as has been mentioned by the Commissioner, and emerging risks, there is need for us to urgently respond to these issues. Insurers are called upon today to adopt the increased risk associated with climate change, such as natural disasters and extreme weather conditions. We now know better, having experienced drought recently as a country, but also having experienced increasing natural disasters globally and domestically in Zimbabwe, post-COVID-19, and post-COVID-19, that there is need for the industry to change with the changing calamities or growing incidences of calamities in the world. Innovation, such as the insurtechs and partnerships and collaboration, the innovation hubs and accelerators, these are becoming fashionable. But I see we are not occupying the space that others are occupying. There's quite some exciting developments in that space. If you look at some partnerships that are happening with the universities of Zimbabwe and other universities are partnering with other industries. So the insurance industry is called upon to forge ahead such partnerships as they are seen as creating value for our stakeholders. The question of sustainability today is undebatable. We cannot debate about sustainability. And as such, the industry is expected to measure up to rise to the demands of sustainable value creation. But as we talk about sustainability, issues of environmental, social, and governance factors come to mind. And what this only says is, as insurers and as the industry, we should take cognizance of these factors as they affect our decisions and product offering. There is therefore need to invest in sustainable businesses and projects that deliver value and sustainable future. In the social impact space, insurance industry is called upon to develop products and services that address social issues as poverty and inequality. But also, we are called upon to innovate around how we serve those on the lower end of the economic ladder. I was hearing the commissioner talk about micro insurance. I'm not so sure whether these are the innovations that we're talking about. I heard it mentioned yesterday. But certainly, there is need for the industry to measure up to the requirements of the industry, the structure of the industry, which has become more informalized and where the level of poverty is increased. So we need to save those, including those that are on the lower end of the economic ladder. By embracing innovation and focusing on sustainability, insurance companies can not only thrive in the digital age, but also contribute more to resilience and resilient and equitable society. Clearly, there is need to invest in research and development so as to stay ahead of the curve. To the Insurance Institute of Zimbabwe, you are called upon to work towards rebuilding Zimbabwe from the depth of despair to the great height of hope. We are called upon to rise up to the demand of the task. Those are at hitting. There is more work ahead. You and me, we have got the work to transform our country, to transform Zimbabwe to what we want. I thank you and wish you fruitful deliberations for the 2024 Annual Insurance Conference. Thank you.
Thanks very much, Doug. I find it interesting as he immediately moved off the stage, but will allow you to take your seat over there. Normally I would love them to talk there. Well, there you have it, ladies and gentlemen. The tone has been set in terms of the keynote address. And what I pick up from there is the issue around innovation and being in sync with those modern trends that are being talked about, whether it be micro-insurance or whatever aspect it is. But I think there is that call, there is that repetitive issue around and asking us the question, to what extent are we really innovating and in sync with developments? Any comments in that regard? Is this initiated on a marketing perspective, or is your product developers who will then take it to the marketing side of the business? Your thoughts? I will go through to the marketing people and find out their views. Any thoughts, contributions in that space?
Good morning, colleagues, and thank you, Doctor, for the good speech well delivered. Talking about innovation is a key driver of value. It's all good, but when you look at the ontological aspects of what is happening, bringing it closer home, you look at the issue of tensions. The industry can only do so much in terms of innovation around that aspect. But there's always the third force that comes in. I know the regulator at some point towards the end of last year directed the insurers to carry out an exercise to determine the value of the lost pensions over the years. But ever since, there's been a dead silence from that aspect. And here we are talking of innovation, and still the question that remains is, what is our pensions? Where are we? How can we innovate further? And now there's even talk of monocurrency. From a macro level, things are always changing left, right, and center. How do you innovate? How do you sustain those innovations? Thank you.
Well, you might need to be doing another exercise because pension values have been lost in the last month. Doc, do you want to comment on that? Or anyone else want to comment on that?
Thank you. On the last concern about what seems to be the third force and issues that are happening outside which are external factors, I think the clarion call that we're making is, as an industry, let's do what we're expected to do and leave the rest to the policymakers or others. So if we adopt this spirit, the spirit of doing what we're expected to do best, and everyone of us adopt the same spirit, I think together we can build Zimbabwe we want. I can assure you from where we sit that the policymakers are seized with transforming the economy. And it is not an easy task to do, especially given where we come from and given the nature of our challenges that have become structural. So the journey, as I have indicated, is not going to be an easy one. It's going to be a tough one. But the core is, in this tough journey, let's do what is expected of us. Thank you.
All right. You know, sometimes we talk on a theoretical perspective, and Mauritius is in the house. I just want your contribution in terms of this discussion around innovation, and want to understand and get a feel on your end in Mauritius. What is the vibe around that? How do you see it? How do you guys tackle it? What is the approach, as it were, that you undertaking in Mauritius? I thought you should pay for winning a bottle of wine last night. Do you guys remember that? All right, over to you.
Share the one video. Thank you. It's a very interesting question. And definitely the Mauritian market is a small market. It's not that big as Zimbabwe. Nevertheless, the insurance industry is progressing really well. I think even the insurance penetration is quite high compared to some other African countries. And what I could say in terms of innovation, it won't be exactly innovation, but I would like to talk about the line of business which we see in Mauritius, which I haven't really seen in one of the slides there. For example, the financial lines. When we talk about the financial lines, DNOs, professional indemnities, we are seeing a lot of them, and I won't go too far. I would say that even our book of business is like 80% dominated by financial lines. So what are we doing like here in terms of the book of business, the portfolio composition? How are we cross-selling? So, for example, we have everything we can make out of it, and what would be our responsibility in fact to see there is a need. We are talking a lot about ESG, and but what are we trying to understand from other countries globally about what do they need? Maybe they are already factoring it in our pricing when we talk about treaties, okay? And somewhere it is priced and taken care of, and we at our end here, we are focusing more on the traditional lines, and maybe not really meeting the needs of the customers by talking a bit more about the existing other existing products around the world. And so it's hard now to talk about the new line of business and how the workforce is ready as well to talk about innovation and be close to the client, hear the client, come up with tailor-made products, and really hearing as I mentioned, if you are close to the client, being transparent, whether it is in terms of wording, because I heard earlier that there are a lot of complaints, for example, claims not being met. So because there is that lack of understanding on the client side, and us maybe not really explaining the real product that we are selling. So once we have done with it, we can move on to coming up with the real products that our customers need. Thank you.
You sure you don't want to be one of our presenters? All right, I think excellence. I think she's coming up with the aspect that it's about hearing what the actual client is needing. And hence that then generates the innovation around and coming up with a solution. I'm just jumping. I see we've got South Africa well represented here, and Philip will be presenting later. But I'd also love to hear it in terms innovation when you look at a much, much bigger economy, a much, much bigger industry. Philip, I know I'm just jumping on you, your thoughts around that.
Thank you. As we speak now, we're implementing our new claims management system. So it's going to be a global process. So South Africa is launching now. So we're integrating that. The training is ongoing. When we get back to South Africa, we're going to be trained on our new claims management system. It operates as, it will contain significant amounts of data, insurance claims, and manage those claims through a process. And going forward, once you've got your data, from my side on an investigation perspective, I like identifying people that are responsible for crimes, and it's important to have that basis. So you've got your solid record-keeping structure, electronically, and where necessary originals, then we're taking a giant leap forward. On top of it, we have integrated electronic records, so our company's office in South Africa is now electronically running, so records are accessible online by registering, and if providing you fulfill the requirements, you'll be able to access those so you can verify insureds. I noticed earlier that there was an issue mentioned of unregistered companies. That's getting less and less in South Africa because of the registration process and the accessibility. And AI is on its way, make no mistake. It's going to be here in terms of crime and detecting crime. So we're looking forward to introducing additional AI to our systems that we are implementing as we speak.
Awesome. No, thanks very much. And his response is looking at the aspect of technology, AI, and incorporating that in our normal day-to-day system. So I think the challenge that is there, as was articulated by Dr. Crispian, is that to what extent can we actually go around and innovate using, as Philip is saying, using the aspect of technology, the aspect of AI, and then coming up with more clear, well-defined systems in terms of how we operate. Very interesting. Ladies and gentlemen, let's give ourselves a big hand there. So we are ahead of schedule, but I've got a few surprises for you. May I ask the following delegates to be upstanding? Andre Meyer, please be upstanding. Hendrik Ngena, please be upstanding. Donald Mute, please be upstanding. My Babazal. And Philip Thorne, please be upstanding. So they are not in trouble. For starters, let's just give them a big hand. Louder, ladies and gentlemen. Louder! So these four, I like how I've got everybody's attention. They hit it to the core of being the early birds. And they are receiving, courtesy of Old Mutual and courtesy of Transaxis, you will be receiving some special gifts to say thank you for respecting time. Once again, let's give them a big hand. You may be seated. Yeah, that's how we roll, you know. So, my beloved friends in the Institute, you've taken note of them. Please make sure that as we go for our tea now, they receive their thank you gifts for respecting the thing called time. Well, ladies and gentlemen, we are done with the first part of our session, Monday morning session. We will now be breaking for tea. The time is 5 minutes to 10. We will be back here at 10:25 to start at 10:30. Can we now break for tea? Call the house in order. Right, thank you very much. Some very interesting discussions over tea, made some friends, some good value, high networking, and I think a lot of value has been created out of those interactions. Thank you very much, ladies and gentlemen. We're going to move on to part 2 for the day. We did have earlier on insurance industry outlook. We then had that keynote address. And we're now going to move on to a topic around the economic outlook. And this has been delivered by a lady who is CEO of an international business consultancy firm, business consultancy, coaching. Apart from that, she's an author. And I think we are at a stage whereby we are very much looking forward to having a discussion and hearing what the economic outlook is like. Ladies and gentlemen, let's put our hands together for Gladys Shubambili to come forward.
Wonderful morning to all of you this wonderful day, which is a great day and a great morning. I would like to acknowledge the representative of our Commissioner, Dr. Moran Sikwa, and also our President, Mr. Tatenda Katoma, the fellow speakers that are in this room, and all the members of the Institute of Insurance of Zimbabwe. I will ask the presentation. Thank you very much. So I'm really honored to be standing before you this wonderful morning. So I've been tasked to talk about the economic outlook of Zimbabwe in light of the insurance sector in Zimbabwe. So you can go on to the next slide. So I'll begin to talk about the developments in Zimbabwe. So our economy, it continues to navigate a complex mix of challenges and opportunities throughout 2023, and as it enters 2025, there are so many challenges that our economy is experiencing. Our country, it remains heavily reliant on sectors such as the agriculture sector and the mining sector. But inflation, currency volatility, and external debts, they continue to weigh down on economic growth. The insurance industry is a very critical player in risk management and financial stability. The insurance industry is a very critical player in risk management and financial stability, which is evolving in response to these macroeconomic trends. So this presentation will provide an overview of the economic performance in 2024, the predictions for 2025, and a deep dive into trends and issues that are affecting the insurance industry, the opportunities that are available, the risks that the insurance industry is facing due to these economic developments, and also recommendations that the insurance industry can implement, and a call to action that can be done by the insurance players in Zimbabwe. So the economic performance for the 2024, in terms of GDP growth, the economy grew by an estimated 3.5% in 2024, which was driven by agriculture and mining, though output was constrained by erratic weather patterns and persistent inflation. Inflation developments in our country, inflation remained very high, averaging between 100 and 150% due to currency instability and supply side disruptions. I was talking about the inflation. I was saying that inflation remained high in our economy due to instability, due to currency instability and supply side disruptions. There are also issues of currency volatility. The Zimbabwe gold, which was introduced in April, it continued to depreciate with parallel market rates differing from official exchange rates by up to about 50%, which has created significant uncertainty across industries, including the insurance sector. Regarding unemployment, it remains high at around 19%, particularly in the formal sector, though the informal sector continues to absorb a significant portion of the labor force. So we are saying that there is high unemployment, which also presents an opportunity for the insurance sector because of a growing informal sector. So there are many opportunities that the insurance sector can take advantage of due to the growth of the informal sector. That's just information about the agricultural sector to just show that the agricultural sector contributes a lot to the economy of Zimbabwe, and it is a key driver of this economy. Post the 2019 drought, the agriculture sector has been on a growth trajectory. The success was on account of climate smart conservation agriculture practices under the Kubunza scheme. This is also coupled with the continuation of input support programs for farmers, improvement in extension services, mechanization, and irrigation development. In 2024, agriculture growth is projected at -15% on account of the El Nino-induced drought. In the outlook to 2025 growth, agriculture is projected at 12.8% on account of normal to above rainfall. It is also evident that there is need to deepen investment in irrigation infrastructure to build resilience against the impact of droughts. The mining sector is the other major sector that contributes to the growth of Zimbabwe's economy. The contribution of the mining sector to the economy has been steadily increasing from 11.5% of GDP in 2018 to current levels of 13.3%. Similarly, in 2024 and 2025, growth is expected to be at 2.3% and 5.6% respectively. The growth has been driven by increased output across all minerals and the discovery of new minerals like lithium, as well as investments in additional capacities. Looking at the key macroeconomic indicators in our economy, our GDP growth, according to the World Bank estimates, are estimated at 3.5% for 2024. Looking at our inflation rates, according to the ZINSTAT, in October 2024, the month-on-month inflation increased to 37.2%. In terms of our exchange rates, our exchange rate is 25.58 Zimbabwe dollar to the US dollar. In terms of public debt, Zimbabwe's public debt, it stands at around 18 billion US, contributing to fiscal challenges in the economy. In terms of foreign direct investment has been very low, around 150 billion in 2024 due to political and economic uncertainty. Now I'll speak to the domestic inflation developments. I've talked about the month-on-month inflation rate, which has increased to 37.2% in October 2024. What is it that the central bank has done to deal with these inflation developments? On the 27th of September, the Monetary Policy Committee, it pronounced statements to increase the bank policy rate from 20% to 35%. It also increased and standardized the statutory reserve requirements from demand and call deposits of local and foreign currency deposits from 15% to 20% to deal with the inflation pressures. It also was trying to allow for greater exchange rate flexibility in line with the increased demand for foreign currency in the economy. The reduced amount of foreign exchange that an individual can also take out of the country was also reduced from $10,000 to $2,000. And also another measure that was implemented by the Reserve Bank was a depreciation of the local currency to 24.39, which really affected the insurance industry. I was talking at an insurance forum a month ago where one of the players said that they were in a board meeting to discuss some policies for their particular organization, and they heard about the announcement whilst they were still in the meeting, and what they had discussed came to nothing. So this is the extent of what the policy environment is actually affecting the insurance industry. So in terms of monetary policy, the Reserve Bank has adopted a tighter monetary policy stance to address inflationary pressures and support currency stabilization through increasing the reserve ratio, as I was talking about, and also the increased interest rates. Also, the exchange rate dynamics. There was the introduction of the Zimbabwe dollar, and also the management of the foreign exchange market have been crucial in maintaining exchange rate stability. Regarding foreign currency availability, the central bank has been trying to improve availability of foreign currency through various measures, and it has also been a key focus for the monetary authorities, and we are happy that the Monetary Policy Committee member is amongst us. So for any further questions and anything, we are in safe hands. So all your questions and answers and your queries, they will be answered tomorrow. So regarding fiscal policy and deficit financing, our Ministry of Finance has been on a revenue mobilization strategy. The government has implemented initiatives to broaden the tax base and enhance revenue collection, aiming to address the fiscal deficit. In terms of financing options, Zimbabwe has explored various financing alternatives, including domestic borrowing and engagement with international financial institutions to fund this development agenda. In terms of expenditure management, there have been efforts to streamline the government spending and prioritize critical investments which have helped to control the growth of the fiscal deficit. But whilst we are on the fiscal deficit, we have also realized that it could actually be a bigger figure because the government may not be in a position to pay some of its suppliers and contractors. So for the insurance and pension sector, the government may now try to force players in the insurance industry to comply with prescribed asset status. And in the absence of good investment assets, players risk holding less investment options. So these are issues that can affect us as insurance players in Zimbabwe. In terms of sustainability concerns, maintaining fiscal discipline and ensuring the sustainability of the country's debt policy remains key priorities for policymakers. In terms of domestic savings and investment, there's been a mobilization of domestic savings. It has been a priority with initiatives to promote a savings culture and improve access to financial services. The central bank has done a lot in terms of improving access to financial services. Last month we were here again at the IIZ annual financial inclusion conference, and a lot of developments have happened in terms of trying to improve access to financial services. In terms of investment flows, the government has introduced policies to attract foreign direct investment and encourage local entrepreneurs aiming to boost overall investment levels. And these local entrepreneurs, they need the insurance sector to hold their hand. So we'll talk about this in future slides. In terms of capital formation, there have been efforts to enhance capital formalization, including infrastructure development and support for productive sectors, which are crucial for Zimbabwe's economic growth. Now, this is an economic outlook and its implications from the global and regional economic outlook. The global economy, it is expected to slow down in 2024, with the growth rate projected to decline from about 2.6% in 2023 to about 2.4% in 2024. The Sub-Saharan Africa regional economy is expected to maintain a positive growth trajectory, with the growth rate projected to increase from 2.9% in 2023 to 3.8% in 2024. Despite the anticipated slowdown in the global economy, we can see from the figures on that table that in the Sub-Saharan Africa, the African economy is actually expected to grow at an accelerated rate. These figures are for January 2023, but there has been a new document by the same source for 2024. Here is some water. So now I'm still talking about the global economic outlook and the regional economic outlook. There's also been the weak global growth, especially in China, which is being felt through declining mineral prices. Zimbabwe's major exports are minerals, thus the country will be adversely affected by declining mineral prices. We also have an issue of the adverse weather patterns and wars, which have resulted in the increased prices of Zimbabwe's exports, such as fertilizer and wheat. So Zimbabwe is going to be grossly affected by this global and regional economic outlook due to declining mineral export prices, rising external debt, and also the rising cost of imports, and also crop failures, rising and food prices, and energy shortages, which we are actually experiencing in the country. I think last night we experienced that the generators were going on and off. These are the energy shortages that we are experiencing in our country. So what are factors that are driving these economic conditions. Agriculture. The agriculture sector, especially tobacco and maize production, has been a major driver of growth, contributing to about 17% of GDP. In terms of mining, Zimbabwe's mining sector, particularly gold and platinum, contributes 60% of total export revenues. Monetary policy. The Reserve Bank of Zimbabwe has introduced tighter monetary policies to combat inflation, including higher interest rates. In terms of external debt, Zimbabwe remains in debt distress with external arrears to international creditors. In terms of climate change, Zimbabwe continues to face the impacts of climate change, which affects agriculture and food security. Looking at the prospects for 2025, the World Bank forecasts GDP growth of 4% for 2025, driven by improvements in mining, output, and agricultural productivity, assuming favorable weather conditions. The inflation outlook is expected to moderate but remain elevated, likely between 50% and 80%, as the government continues to grapple with currency stability issues. We will hear more tomorrow, so you will reserve your questions on currency stability issues. With regards to currency, the Zimbabwe gold is expected to remain volatile, but ongoing efforts to stabilize monetary policy could bring some relief, provided that fiscal discipline is maintained. We'll also hear more on this tomorrow. The domestic outlook, according to the Reserve Bank, despite the recent exchange rates and inflationary pressures in the economy, the Reserve Bank expects month-on-month inflation to correct and dissipate to below 5% by end of year 2024 and below 1% for the rest of 2025. In 2025, the bank should contain reserve money growth to economic growth, enhancing levels of around 15 to 20% per annum during the year, taking into account the projected rates of 6% and the need to maintain monthly inflation around 1%. Reflecting the base effects as a result of the high increase of the month-on-month inflation in October 2024, annual inflation in 2025 will be elevated until September 2025, but is expected to significantly moderate in the last quarter of 2025 to the end of the year, to end the year at around 15%. With regards to the fiscal policy, what is the thrust according to the Ministry of Finance? This was at a meeting, a pre-2025 budget meeting, according to the Ministry of Finance. The overall budget deficit of less than 3% of GDP. Containing expenditure on compensation of employees, including pension, within 50% of projected total revenues threshold in any fiscal year. The government is also expecting to refocus expenditure on the acquisition of financial and non-financial assets towards the financing of economic growth strategies outlined under NDS1. So what are the trends influencing the insurance industry in Zimbabwe? We have currency, volatility, and monetary policies. And we also have the environmental, social, and governance integration issues. We also have issues to do with climate change and insurance. We also have issues to do with customer value, embracing customer-centric economic ecosystems. We also have generative artificial intelligence in the insurance sector. We also have digital revolution in insurance, and we also have issues to do with regulatory and policy changes. We also have issues to do with workforce challenges, retention, and the attraction of new talent in the industry. So what are the risks from the prevailing economic conditions for the insurance sector? conclude, policyholders are often hesitant to purchase long-term insurance products due to unpredictability of the local currency. This exposes the industry to liquidity risks and an erosion of customer trust. Another risk is of increasing climate risks, which are pushing up insurance claims, especially in areas such as crop insurance. But however, these risks also create opportunities for growth in the insurance sector. Yesterday, I was having a conversation with one of the delegates from an insurance company, and we were discussing about these issues to do with crop insurance, and they were talking about an example where they made a payout of almost 300,000. So, all due to increase in climate risk. There are also issues to do with cyber risk. As insurers transition to digital platforms, they expose themselves to increasing cyber threats. Cybersecurity is becoming a key risk, and insurers, they need to protect their sensitive data and also ensure system resilience. I'm sure we have had some directives that the Ministry of Information is introducing. We were laughing about the issues of WhatsApp group admins being asked to be certified because the government is trying to ensure data security issues. So maybe you have WhatsApp groups for your clients. So you need to take into consideration of that policy. I think the policy is saying that the license fees will be between $50 to $500. So these are issues to be taken into consideration. So what are the opportunities for insurers in Zimbabwe? There are opportunities for digital transformation, increasing adoption of mobile technology, which offers opportunities for insurers to innovate with mobile-based insurance products and services. Also partnerships. The insurance sector has opportunities to collaborate with agriculture and mining sectors to offer opportunities for tailored insurance products. So we have been talking about the climate risk, we have been talking about a lot of risks. So there are also opportunities that, as an industry, you need to take account of. We also have issues to do with insurers. They could develop US index policies or explore alternative assets to hedge against inflation and currency risks. I want to talk about issues to do with financial inclusion, where as an industry, we need to offer affordable micro-insurance tailored to smallholder farmers. Insurers can also promote financial inclusion and reach undeserved populations. There is a case study in Goromonzi where IPEC facilitated payouts to farmers which were affected by drought, demonstrating the potential of weather index insurance to provide vital financial relief and resilience. I will not speak more on the opportunities. You will have an opportunity to get the presentation. I want to talk about the case studies for micro-insurance products that have been implemented in other countries. There is a product that is called the Kilimo Salama in Kenya. So this product, it means that safe agriculture. It's an index-based weather insurance product which was launched by Sigeta Foundation for Sustainable Agriculture in partnership with UAP Insurance and mobile network provider Safaricom. So this product, it uses mobile technology and weather stations to offer affordable crop insurance to Kenyan farmers. And it has saved over 180,000 farmers to date. Another product is the product that is in Ethiopia and Senegal. So like Zimbabwe, they have Senegal and Ethiopia, like Zimbabwe, they have agricultural economies that are heavily impacted by climate change. So the Arab Rural Resilience Initiative is a collaboration between the World Food Programme and Oxfam America focusing on providing smallholder farmers with risk management tools, including insurance. So in Ethiopia by 2020, the Arabo initiative has reached over 100,000 farmers. So this is also an initiative that can be introduced in Zimbabwe. We also have the Yeshashini Cooperative Farmers Health Scheme in India. Like Zimbabwe, India has a large rural population with inadequate access to health care. So this product has also managed to serve over 200,000 surgeries. So the product is a cooperative scheme. It is a health insurance program which is designed specifically for members of rural cooperatives in India. This program provides affordable surgical and hospitalization coverage to farmers and their families. I think this will be a very welcome program in our rural communities in Zimbabwe. We also have the CAD MBA program in the Philippines. This product is a micro-insurance provider which is affiliated with the CAD mutually reinforcing institutions. It is a leading microfinance institution in the Philippines. CAD MBA provides life insurance, loan protection, and health coverage to low-income households. So this is also something that can be done in Zimbabwe to partner with insurance companies as an insurance industry. So what are the recommendations for insurers? Inflation hedging. Develop strategies to hedge against inflation, such as adjusting premium structures. Diversification. You need to explore product diversification, especially in high demand areas like health and agriculture. Innovation. It will be key to leverage technology to reduce operational costs and reach undeserved markets. Risk management. It is important to enhance risk management practices to deal with currency and inflation volatility. Also, the issues of collaboration, engage with policy makers to advocate for a stable regulatory environment. Also, critical is the advancement of financial and insurance inclusion through financial education programs. So, those are financial inclusion initiatives that we do as Intelligent Business Consultancy. The programs there are just trying to say that as insurance practitioners, let's develop tailor-made products for the various segments that we have in our nation, rural segments, products to do with children. Maybe you need to think about what products you can develop for young people, rural populations, for women, and alike. So, what is the call to action? Importance of partnerships between the insurance sector, the government, and the private industry. Also, to encourage innovation and resilience in Zimbabwe's insurance offerings. So the concluding remarks that I have is for the economic outlook of Zimbabwe, which presents a challenging opportunity and field landscape for the insurance industry. Also, issues to do with emerging trends such as ESG integration, generative artificial intelligence, and the digital revolution to offer immense potential for growth and innovation. And also by embracing these trends and focusing on customer-centric ecosystems, the insurance industry in Zimbabwe can expand and have its value proposition and enhance its resilience in the face of economic, environmental challenges. Thank you very much for listening and for the opportunity.
Thank you. Thanks very much, Gladys. A bit of firepower in there, but you'll see that some of the questions were deferred to tomorrow. So I'm not quite sure what you're going to be asking Perseverance. I hope you're taking notes and looking forward to that aspect. Are there any comments or contributions with that? You heard my disclaimer that some of the parts of of the presentation will be carried over to, so don't ask those parts. I don't know how you do it, but yeah. Any comments, contributions? I see something common that that actually came out of that with regards to this issue that was raised earlier, instability, policy instability and the like. Very interesting aspects, because that is definitely going to be an interesting discussion tomorrow. Are there any contributions or comments from the team? We're all good? All right.
Thank you very much, Madam Speaker. My question is, what is the likely impact of what we see happening in the neighboring countries? We've seen the election that happened in Mozambique and the unrest that followed after. We've seen what happened in Botswana and the upcoming elections in Namibia. What will be the likely impact to our Zimbabwean economy? Thank you.
Thank you very much for that question. What has happened in Botswana, what has happened in Namibia, it can put pressure on our economic situation. So as I was speaking about in the presentation, if we have political instability in our economy, it will also affect how we are going to be operating. It is also going to affect issues to do with political stability, and it will affect even our foreign direct investments. We have investors who would be interested in investing in the insurance industry. So if our political instability will worsen because of the effect of what is happening elsewhere, it will affect our foreign direct investment, which will also in turn be a disadvantage to the industry.
But would you not look at the developments that happened in Botswana, creating stability or projecting stability on point of view? That was what happened in Botswana, which you respect, is different from the norm. Are you with me? So I'd love to hear your contribution in that space.
Thank you very much. What happened in Botswana is a very welcome development. If that would happen in Zimbabwe, it would really be a welcome development, which would bring a lot of stability. And yes, it will bring a lot of stability, and it will actually increase our FDI to greater levels, and it would even reduce some of the debt that we have in the country.
All right, I hear you. But I'm directing this to the delegates so I protect you, man. This is not a political discussion, right? So don't look at the answer in that perspective. She is looking at it in terms of the economic aspect, isn't it? But I get you.
Yeah, thank you very much, man. Just in the short, should we brace for things are looking up?
Did you get the question?
Godwin is saying, should we brace or things are looking up in 2025? What's your view?
I think we have some positive developments that are coming up in 2025. As I was talking about in the presentation, in the agricultural sector, should things shape up well and our rainfall patterns improve, I'm sure we will see some positive developments in the economy. So I think we should actually be bracing up. And also, we talked about issues to do with innovation. As people who are now living in artificial intelligence, in a high information era, in a highly digitalized global economy, we should also be innovating and thinking around how we can actually overcome the challenges that we are facing through digitalization. So we should raise up and innovate the more.
Awesome. No, thanks very much. Let's give her a big hand, ladies and gentlemen. May I kindly ask board member Lois Kunyongana to come forward and assist with the presentation of our small token. Let's give them a big hand, ladies and gentlemen. All right, thank you. One, two. I'm having fun with the gadgets today. We'll have our own session with some of that. All right, awesome. I think some very interesting topics. The last one being one where there were some areas that we are very keen to touch on tomorrow because it's a topic item. And we're looking forward to that. The next topic we're going to have a presentation on. The title reads The Impact of Climate Change on the Insurance, Reinsurance Industry and Proposed Response by the Players. This is being presented by one of our very own. I call him Mr. Portuguese. We exported him to Mozambique and now he commands Copreto, and all that jazz. But this is a very good friend of ours. And it is good to always bring one of our own coming from the diaspora. Msafungoti diaspora is only overseas. Next door is the diaspora as well. Ladies and gentlemen, assist me in welcoming our own son coming back home, Mr. Mfaro Chaluka. Let's give him a big hand.
Good morning. Saying Mozambique, good year. That's good morning. I just want to recognize the presence of commissioners, representatives, President of the IIZ, the directors, and all the presenters. It is good to be back home. I've been in Mozambique for quite some time. It's now more like second home, I think almost 18 years. I also want to recognize there are some people who helped me to get here. Mr. Machinizo from Waikari is the person who recruited me into the insurance industry. He was a part of the interviewing panel back then at Simri. I really appreciate that. I also have Mr. Clement Ketsan. These are the people who taught us insurance. When I joined there, he was an underwriter and I was just a trainee from college, from the university. So thank you very much for this. For Mozambique, things are not as stable. We hope there will be some stability. So last week we were working from home. Then we don't know what will happen tomorrow. So maybe these are times of changes, but change is always a challenge. So my topic, I'm talking of something where we have experienced a lot. We continue to experience these challenges, especially in Mozambique, not only in Mozambique. I know in Zimbabwe, the whole region, because of climate change, we're seeing a lot of trends which are related to climate change. Right. Let's operate. Right. Is it? All right. climate change, we say, what is climate change? So climate change is basically the shifts in the long-term shifts in temperatures and weather patterns. These shifts may be natural, but they've kind of gathered pace from the 18th to the 19th century. Why? Because of the discovery of the steam engine, industrial revolution, there was a lot of use of coal. So we know that all these industries, they use fossil fuel. Basically, we're talking of coal, oil, and gas. They produce heat-trapping gases. So what happens then is we burn fossil fuel. The fossil fuel, they generate green gases. So these are like, they become like a blanket upon the surface of the earth, then they trap the heat. So the main gases that cause these greenhouses are carbon dioxide and methane. We all get this from coal, from fuel, the cars. So every day when you are driving to work, you are contributing towards climate change. Maybe you need to cycle. Yeah, right. So the industries which are now in the forefront of this challenge in terms of climate change contribution, your energy, industry, transport, buildings, agriculture, and how we use the land. So from energy, we have a lot of thermal power stations here in Zimbabwe. We've got one there. We do have Karimba, but now because of also climate change, the generation is very low because there's so much low water levels, even Zambia is being affected. So from research, the average global temperature has risen by 1.1% since the pre-industrial areas, the industrial time. There are projections that this increase can go up to 2 to 3% at the current emission levels. So natural disaster claims, as a lot of those climate change, they've increased by 250% from 1980, that is 44 years ago. 250%, that's a very big margin. And I don't think insurance rates are increasing at that pace. So climate-related disasters in 2023, they caused around 295 billion in terms of losses, especially total losses. So it's the damage or the cost to the economy at large is very big, and the insurers they've got a part to play in this. So how are cyclones formed? Wait. So cyclones, this part of the world, the East Africa, we call them cyclones. When you go to the Americas, they call them hurricanes. When they go to the Far East, they are called typhoons. So just tropical cyclones require warm water. That's a temperature of something at least 26 degrees. This is very common in that side. The Indian Ocean is one of the warm oceans when you connect the other side. So it's ideal for cyclones to okay. So the warm and moist air rises above the ocean. They need to cause what you call convection. I think we have studied about convectional rainfall in our geography when we were in school, when we were young. So this continues to go up, and then it creates a kind of another suction effect. Then due to the Earth's rotation, it starts to rotate, then it can grow wide, it can cover a big space of time, space of the planet. So when you see that television, yeah, you need to pay attention. If you need to pay attention, that's the way that is going. It shows the intensity of the cyclone, which is coming. I think we've seen this with the newspapers. It's just showing from the sea. These are pictures which are taken from satellites. Right, just for your information, classification of some of these. So the first one is tropical depression, just below 61 kilometers. Then tropical storm, 62 to 118 kilometers. Then you see now we start from category 1, 119 to 153. So category 2, 154 to 177. Imagine when you drive, normally, I think drivers who drive in this range, they are fast drivers. I think it takes lots of courage to go to category 3, 4. Just imagine when you go to category 5, 250 kilometers and above. And that when it comes, it's a disaster. Whatever is on the way is in serious trouble. I saw this first time when I got to Mozambique. There was cyclone flood in 2007. There's a place called Gilango. It's a resort. They do a lot of thatch and wood and what. So I used to pass through there on my way to Maputo because I have to stop over. The water was not good. So I saw some of the lodges where I used to stay were just raised to the ground. It just shows how powerful some of these things can be. So the global hurricane season for this year, 2024-25, they started in the US. I think we've all heard about Hurricane Helene and Hurricane Milton. So the damage, estimated damage, these are rough estimates, were almost 36 billion to 54 billion. I do not as yet have information about the flights from Spain. I'm sure those ones will be a lot more because they did a lot in the towns. So these are big. Shows that the cycle of these weather patterns, they are not ending. The damage is going to intensify. So the typhoons, they're okay in East Asia. These affect countries like India and China or Thailand. So it's described by the University of Chinese University of Hong Kong, we do that the typhoons have become dramatically more destructive in Asia over the past 40 years, and they can go up to 190 kilometers, but some even a lot more. The study also revealed that between 1979 and 2016, typhoons were making stronger rainfall and are lasting 2 to 9 hours. So it means they hit with a lot of impact and they last a longer time. So then in our region, that is East Africa, Mozambique, it affects all these regions. So cyclones are prevalent between January and March. This is more like the peak cyclone season. With an exception in 2019, after cyclone Idai in March, we got cyclone 6 weeks later, that was in April. So this might happen, because with all these changes in temperature, I'm sure this year you saw the cold spell in KwaZulu-Natal, which has never been seen before. So these issues of climate change are real. So the countries that are very much exposed in top of Madagascar, Mozambique, Mauritius, and we've been seeing these cycles hitting Zimbabwe, Malawi. In fact, the past 2 years, Malawi suffered more from cyclones than Mozambique. It doesn't mean that it passes Mozambique, but Mozambique depends where the cyclone passes. If they pass through areas which are sparsely populated, we don't see anything to talk about in terms of insurance or material damage. So we cannot say we are not safe, even though we are rather inside. With all this, we have seen Tanzania, we have seen Ethiopia, so we are not safe. So Mauritius has learned to cope with cyclones due to their building standards. I've seen that most of the houses were roofs of concrete. This is not the case in our region, in Mozambique, in Zimbabwe. We have very nice houses with tiles. If those cyclones come, our houses, we better have adequate insurance. I hope everyone is got insurance close with houses, because those tiles, they just rest in the ground. So there is need here for change here. So Mozambique is among the 10 countries most vulnerable to the impact of climate change. So in Africa, between 2012 and 2024, more than 59 disasters which are weather-related, they affected Africa. 15 of which were short-course cyclones, and almost 9 million people were affected. So this year, there is a forecast that there will be what they call La Nina. La Nina means excessive rainfall. Last year, the current season, we're coming from the drought season. So that's another challenge this coming. So the Mozambique Minister of Finance was saying the impact of climate change on the GDP is something like 0.7%. I think that figure is quite conservative, I'm sure it's a lot more. So just to show you some pictures of cyclones that hit Mozambique in 1975, 2007. I think you can see some of them here. We know Cyclone Helene in 2000, there was Cyclone Flood in 2007, there was the Hunda. So you see where they play around, some then cross in Zimbabwe. I think I'm seeing about 4 which cross in Zimbabwe. There was one actually even all the way to Botswana. This is now a more recent update. You can see how they hit around there where there's concentration as they arrive at the next level. So Mozambique suffers most, but also it's affecting the other countries which are inside. So just to give you these cyclones which have made landfall in Mozambique, there are some of them, not all of them. From the time I went to Mozambique, we used to get one in about 3 to 5 years. Now, I think since 2019, we've been experiencing cyclones every year, almost 2 were times 3. So this year we had Cyclone Filippo, that is 11 to 13 March. We also had some floods in Maputo that was around 23 to 24 March. So we even had a claim which was hit by cyclone. Then before they settled well, the floods came. So it was double trouble. So Cyclone Freddy, you can see I've highlighted it, is in yellow. Cyclone Freddy is the longest changing cyclone in the history of the world. It lasted for 36 days. So it came through the southern part of Mozambique, in Ambani, I think it got a bit southern Zimbabwe, then it went back to the sea, then it came back to the northern central part of Mozambique that was around the mines and this and that. So it shows the exposure which can come from these cyclones. So we don't know, you cannot project exactly what will happen. The most destructive cyclone was, in terms of cost, was cyclone Idai. I think 1.4 billion worth of economic damage, but for insurance purposes, maybe only 5%. I think insurance does not pay more than 700 million, which is very little. So it shows that the economy, even up now, there's some areas which have not recovered. So there's also a gap. This is a picture of Mozambique, gap in terms of GDP, the ideal growth. You can see under cyclone, what's the other one? Okay, cyclone Kenneth. Then there was COVID. You see there was a dip in the GDP. Then also there was another cyclone there. So this affects our GDP growth. So I've already covered this about cyclone Idai. I'm sure some insurers here paid some claims and some insurers as well. So the impact of climate change on agriculture. In Mozambique, most crop farming is done in low-lying areas, that is Zambezia, Sofala, you talk of southern parts of Mozambique. And 95% of the agriculture is done by small-scale farmers. So these ones, they rely on rain. So when there is weather change, whether floods or drought, those are hit most. I know there is one company which almost went into bankruptcy. It's a sugar estate in the southern part of Mozambique. They were so much flooded that up to now they are not producing. And they do not have crop insurance. They only the damage and business interruption. So it shows what it can do. So Mozambique is also estimating that these climate change disasters can cause 25% in decline in crop yields, mostly things like maize, thereby affecting your food. So there's also impact on power generation. Climate change is generally expected to reduce, like Mozambique's ability to produce hydropower electricity. And we all know that in the region, a lot of countries, Zimbabwe, South Africa, Malawi, they're importing energy from Mozambique. So if there is no adequate water in the Zambezi River, then that would affect a lot more of people. So by 2100, said the energy production can go down by 20%. But I'm sure the demand for energy will be going up a lot more. So this will affect all of us in the region. So other sectors to be impacted, the port of Beira sits below sea level. Now because of the climate change, sometimes even when there is no rain, water can get into people's houses because it's coming from the sea because of the rising in the sea level. Even Maputo is also in another low-lying area. So the impact also, food security is affected. Then also some economies, Mozambique, Zimbabwe, they rely a lot more on export of minerals. Like now they've discovered a lot of gas. They also do export coal. Now with this green revolution, there is bound to be the need to reduce spending on this carbon emission. So that can also affect the economy in another way. So infrastructure is being destroyed, the bridge and the roads. And sometimes there's not much insurance. I think those who have been to Maputo, who have seen there's a bridge which was built, 250 million, the longest suspended bridge in Africa. We tried to say we can provide civil engineering completed risks, but no one paid attention. So there is no insurance there. If something happens, it's just gone. Then the climate change impact on the insurance industry. So in 2023, that is last year, about 150 billion of insurance claims were paid. This is according to Munich Re. So what are the impact which is expected? Higher premiums. I think this has already started to happen in international markets. And coverage limits. So some insurers and reinsurers could reduce what they are covering under floods, or they can, like in Mozambique, sometimes some of the insurers, they give a limit for floods because they know that the disaster can be too much. So some companies can withdraw coverage. This has happened in America. This company called Allstate. So they withdrew cover for fire in California because of the wildfires which we have seen there. Then insurers, they're also adapting with climate-related products. So you have your likes of Africa Risk Capacities, they offer the parametric. I'm sure here also is being done, parametric insurance, just to try and help the farmers and the community. So IIZ, they created what they call climate school to help clients manage these risks which are related to climate change. So they want to encourage eco-friendly policies and green buildings. Squeeze-Re, they are providing also solutions for renewable energy. That is covering your solar, your wind farms. So then there is green investment strategies being done by insurance and reinsurers. Allianz, they are committed about 25% to the reduction of carbon emissions by 2025, that is next year. I don't know how far they are. Then they're also committed to the net zero by 2050. So net zero is the balance of the carbon dioxide emissions and the ones which suck them. So Aviva, the UK insurance, was one which is at the forefront of net zero campaigns. So their target is 2040. Then AXA, investment managers, these are part of AXA Group. They've divested from companies with the core-based revenues. So in terms of investment, they say, no, we are no longer going to provide loans or buy shares in such companies. And they are encouraging what they call green bonds. So just a case study, this is one company in the USA, this is Chubb. So Chubb was the first in the USA insurer to restrict underwriting on core policies. And they've stopped providing cover for new thermal power stations. So they are committed to this transition. So they want to support low carbon emission. And they are also encouraging giving liability to those who are into the green environment. Then Tokyo Marine, this is from Japan. In 2020, Tokyo Marine announced that it would stop underwriting new coal-fired power plants. So this reflects its commitment to support sustainable low carbon economy. So they are also going to divest from investments which are more related to coal. In fact, I've seen one company from Brazil, which was called Vale, the biggest mine in Tete in Mozambique. They sold to the Indian Qingdao. So some are also giving sustainable bonds. So the company like Tokyo Marine, they issue green bonds to raise capital for projects which are more like going to reduce emission of carbon dioxide in the atmosphere. So they're also involved in research and partnerships. So Tokyo Marine is heavily invested in climate change research, and it collaborates with academics, institutions to advance climate modeling. I wish we could also do this in our region. So Mini-Gri, their initiative, they are actually even providing cover for there are some industries that are into capturing carbon dioxide. Lloyd's of London, they said they're going to phase out writing of coal-related business by 2030. Hannover Re, they're also promoting their green solutions, ESG. So the climate change adaptation strategies for the insurers and the reinsurers. So number one, there's need for enhanced risk modeling. So advances in climate risk modeling, such as there's a company called Air Worldwide. They do provide some models. So it's something maybe which we need to look at. Then also there's a need to diversify our pool of business, even in terms of across the region. But I don't know insurers. Normally I know insurers, they write business from one country. So if you are doing business in one country, then your ability to diversify is limited. But in insurers, I know most of them, they're writing business throughout Africa. Then also product incentives, offering discount on premiums, like for those businesses which are more sustainable, which are promoting a reduction of carbon emissions. So we can, as insurers, provide favorable terms, cheaper terms. So the role of insurance and reinsurance in supporting climate transition, number one, green bonds and investment. So in 2023, globally, 60 billion was issued for green bonds. I was just reading somewhere, there was an article in Bloomberg in June, whereby the Minister of Finance of Zimbabwe was saying they are looking for international investors to come and reduce green bonds, infrastructure bonds, and cut bonds. I hope this will be taken further. So we can also support the solar, even we can start even at our own company level, where you can use more of solar energy and the like. So there's also need for climate risk advocacy. So reinsurers and insurers, we should be very much committed to this international conference for promoting, for reduction of carbon emissions, because we suffer in paying claims at the end of the day. Yeah, I'm about to finish. So recommended response by insurers and reinsurers. So international insurers and reinsurers markets, they're normally quick to respond with hard terms. I mean, they increase the pricing. But unfortunately, in our region, I have not seen it. I don't know whether here in Zimbabwe, people are not that responsive to what is happening on the ground into international markets, but it can catch up with time. Risk management is becoming critical to mitigate impact of climate change. Hence, insurers and reinsurers, we need to promote risk management. And there's also need for us to lobby the government to come up with the weather-resistant kind of buildings. So that would help us in terms of reducing losses, reduce human suffering, and reduce loss to the economy. So we need to be able to lobby because we know we've got more exposure because we see what is happening from the claim side. So this is my last slide. So for dual impact, climate change, insurers and reinsurers, we need to come up with products that promote conserving the world, reducing the emission of carbon, and also this need for operational sustainability. So the agent of action, climate adaptation and carbon reduction strategies are essential for resilience and long-term viability. So reinsurers and insurers, we should take ESG, it was being spoken of here, seriously. We need to start influencing in our communities, even at school, at company level, at individual level. This is how we can make any difference. Research and partnership, this is very important. So we want to challenge the insurers and the reinsurers that in Zimbabwe and in Africa at large, we need to provide funding to the for academic research, to enhance understanding of climate risks and also come up with good models. So I'm also sure whether anyone, it will be important even to come up with scholarship, sponsor people they start maybe up to university level. So the future outlook. So there is need for ongoing investments in green products. Innovation is very important. And also, we also need to come up with some changes in terms of the way we underwrite risks. In our proposal forms, I think we need to come up with some questions which address the climate-related risks, to find out how our insurers are responding, the insured responding to that. Ladies and gentlemen, thank you. That's the end of my paper.
Thank you very much, Pharaoh. You may take a seat. I think a very interesting discussion there, emphasizing that we mustn't think that being based in Zimbabwe, these hurricanes are out of our space. A couple of recommendations as well with regards structures that we should be really building in Zim in preparation. I think very, very interesting discussion. I'll now open it to the floor if we have any comments, contributions in that space. All right.
Okay, thank you, sir, for the presentation. Two questions. Okay, number one is issues to do with the fossil fuels which you just presented. So my question now was, we have noticed that as reinsurers, you find more than 70% of our insurance revenue comes from these fossil fuels insurance products. So my question now is, are we ready as Africa or African reinsurance companies to be divesting or for this transitioning process? Then number two is issues to do with the green bonds. You have noted that within the global financial markets, especially in Africa, there is really none green bonds which are being floated within the markets. So my question would be, are we also ready as African reinsurers or the African financial markets to be investing in these green bonds? Or are we even as an industry aware of how these bonds needs to operate? Thank you.
All right, just make a note. I'm just going to get another question, and then you can answer them together.
Okay, thank you for the insightful presentation. But I think my question is also linked to what the previous person has asked. So I'm seeing that this conference is to do with innovation. And we are now talking of issues to do with blockchain technology, artificial intelligence, and machine learning. So, as you are aware, these technological issues require a high lot of computational power, which leads to high carbonization. Then at the same time, we are talking of net zero emissions. And in Africa, we've got a high rate of carbonization by virtue of us still using fossil fuel industry. So how feasible is this, especially trying to balance the quest of technology and the climate change issues?
Mfaro, do you want to take that before
Yeah,
the
yeah,
next
yeah.
one?
Hello, okay. On the first question on fossil fuel, yeah, we all depend a lot. In fact, in Mozambique, our biggest client is Emeritus, is actually the mine in Tete, which is into coal. So we are not ready. I think the response cannot be the same. And I think this I can combine with the last question about the demand of power by artificial intelligence and the like, say how feasible is it? I think in Africa, our emissions levels are still low when compared to the international. So our response cannot be the same. Otherwise, we are too far away in terms of development. Our contribution to the carbon emission is just a small fraction when compared to the world at large. So those we have done a lot more in pollution. You know, some started using coal in the 1700 something, 1800 something before we knew about it. So those they need to do a lot more. Then we can start at a low level. At a low level, we need to start the way, but I think we still need to. There's the transition period. And then on green bonds, so I was just researching if anything has been done. I'm glad we also have this Reserve Bank here. It's something which needs to be pursued. I think there's a need to find partners because I think there should be some international financial institutions that can also maybe provide some soft funding, maybe with lower interest rates, or there is a need to lobby for that. So maybe, I don't know, there's a need for someone to come up with products. I think financial institutions, the banks, they can look for funding. Even maybe the likes of African Development Bank, they should have some interest in that. Say, we want to issue green bonds in Zimbabwe. I'm sure once it is done, then insurers, the IPEC, this can be part of the prescribed asset, then that could be a way of contributing towards that. I think that's how it can be addressed. Thank you.
All right, we'll have another one here.
Thank you for your presentation. I think my question is related to the previous question as well, maybe taking what you have answered. My question would be, is there therefore not an opportunity for the African industry to come together and take a position, particularly on the fossil fuels in terms of providing capacity? I think from your presentation, you were saying Lloyd's is saying 2030 they'll be out, and you know many of the international will be out of that particular space, let's say by 2050. But what are we doing as an African market then to say, are we going to follow them as reinsurers and say we are also not going to be writing fossil fuels? Or are we taking our own position as Africa and saying we are going to provide capacity amongst ourselves to carry these particular risks? Thank you.
Let me just take another question.
Good morning. Thank you for the presentation. Bringing ESG into the conversation, how can insurers support climate change adaptation and resilience in vulnerable communities in Southern Africa? Thank you.
Do you want to take those two?
Right. On the first one, yeah, definitely the African reinsurers, they have to provide more in terms of capacity. But hopefully, because the reinsurers also buy capacity from the retro markets. So if you're also buying it in Lloyd's, the Americas, you might also face restrictions whereby they would say excluding, once they state that excluding core and the like, then we're in trouble. But maybe we need to collaborate, Africa, Asia. I know countries like India, I think it will take time for them to exit from core because they depend a lot on core and China. So maybe if that happens, we can get capacity from there. But I think so far we are able to provide capacity. But so this is a challenge to reinsurers, that we need to step up. More business will be coming our way. And also I think the pricing of those risks will go up, which could be an opportunity to write profitable business because capacity will be restricted. And then on local communities, what we can do as insurers, maybe we can even work with schools, kind of teach them, as part of our corporate social responsibility, go and do some sessions on climate change. You buy some trees, you promote planting of trees at schools, teach children. So if people are taught something from the beginning, when they're still young, that would help. I think even in schools, there's also need to include some of these things in the curriculum so that everyone is well aware of it. We do our own small way. So in Mozambique, what we are trying to do as a company, we're also looking at working with the municipality. We want to plant some mangrove trees, those trees which do by the sea. So we want to do some trees. We want also to help some schools as well. Thank you.
All right, I'm going to take final question here.
Thank you, Mr. Chawaruka, for that presentation. You did indicate an increased exposure from natural disasters. That maybe Zimbabwe we kind of feel safe because we are more inland, but there was definitely evidence that once in a while these catastrophes, the cyclones, they do hit us. Where you sit in Mozambique, have you seen a pricing response from the insurance industry matching the increase in exposure? Where we in Zimbabwe, I certainly have actually seen prices going the other way, and the exposure is for disaster. What is it that we can do for us to respond to that increase in exposure? Thank you.
For another final one.
Okay.
Somebody was raising their hand, so being a board member, what can I do?
Thank you, Mr. Chao, and I have the privilege of asking the final questions, not because of being a board member, but because we worked together at Zimri. So I could tell from your presentation that there's a very big protection gap when you look at the economic loss versus the insurance loss. So my question is, what has been the response by the government of Mozambique to ensure that even those from the vulnerable communities who are affected by these natural disasters get some sort of reprieve? Then the next question is linked to something that we are trying to do here in Zim. We are trying to encourage the government to insure their public assets. And from your experience in Mozambique, after all these disasters and claims, inevitably, quite a number of public assets would have been affected by these natural disasters. Have you seen the government of Mozambique trying to agree to the initiatives of buying insurance? And if yes, is this something that you can also maybe help us with so that we nudge our government in the right direction? Thank you.
Sound?
Okay. So to the question from Alice about the response to pricing, unfortunately, it has not happened like that in Mozambique. Actually, the prices are going down. I think it's also because of competition, because of insurers. Now, what makes it worse, I think it might be to do with the lax on the law. I know there's some companies which are operating without treaties. And I think they've been causing havoc in the market by just slashing rates. And as you are saying, this is also what is happening in Zimbabwe. Definitely it will catch up with all of us. I think there is need for us to be serious. As professionals, we need to engage these actuaries to do the modeling. Because when we started, or when some of us entered insurance, these things, we're not seeing any, We would hardly see any cyclone, any hurricane in our region. So the underwriting took those that the risks were low. But now that the risks are high, we need to price for that. We need to take that into account. So it's a challenge which, as an industry, we need to do. We need to be serious about it. Then on the protection gap response, by the government, I have not seen any. Well, the government of Mozambique did something, but I don't know whether it would last long to the vulnerable communities. They took up a policy which they call disaster risk protection. So it's more like your parametric. It's also triggered by the level of rainfall or lack of it. Last year we paid some claims, but I think maybe the loss ratio was around 30. It was introduced last year. It's being funded by the World Bank, so it's going to be running for 3 years. So maybe those are the other aspects which we also need to look for development partners, some donor agencies, if they can at least support the insurers instead of them maybe bringing in, spending money during the disaster, because that will be a lot more money. So that partnership between non-governmental organizations, it can help, or the international funding institutions, it can help. Then in terms of government willing to insurance on assets, yeah, to some extent. What happened, I think those who have been to Mozambique, as you are coming from the airport, there is that first roundabout. Those buildings there, it's the Ministry of Agriculture. Some years back, could be around 2010, they caught fire. I think someone maybe had done some scandals. So maybe someone set it on fire. So they were completely damaged. I think they were no longer usable. So to build those ones, which are there now, they are new. So the government now, through the Ministry of Finance, they took an insurance policy for assets for some of the buildings. But I don't believe that they're insuring all of them, but they've got an insurance policy for the assets which is being administered by the Ministry of Finance. Thank you.
Well, let's give him a very big hand. I think definitely an interesting presentation, feedback. There will obviously be opportunity for follow-up discussions as we have our breaks, as we have our lunch. May I call upon Board Member Godwin Mashiri to please come forward and assist with presentation of a small token. A big thank you very much. Right. Thank you very much, Kwamamfaro there. Definitely, as I said, quite an interesting presentation.